Hi, this is CH. This video is part of a series of videos titled My ABCs or Absolutely Biased Comments to share how an individual investor like you and I can try to find out more about an investment fund from public sources and do some basic research or simple due diligence before deciding to buy the fund or walk away. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. The information shown and mentioned in this video is accurate as of the date stated here. In this video, I will be talking about the 91 GSF Global Natural Resources Fund. Wars are fought over resources. Sure, there are the occasional leaders who start wars for revenge or for twisted fun, but for most wars, be it military or trade or other forms, are conducted with the intent to gain resources. This is not a video to praise or criticize Donald Trump, but let's take a look at the actions and messages he has released so far in his grand plan to make America great again. Besides maintaining technology, military, and monetary dominance in the global stage, Trump's clear drive for oil and gas is to further reinforce energy independency, and his push for manufacturing jobs is essentially to increase skilled labor in the US. Last but not least, there is also an increased focus in ensuring US influence in key global infrastructure such as shipping ports as part of elevating US dominance in the world. The basis of achieving all this are essentially resources. The more resources US can control or produce, the more likely Trump can achieve his grand plan. The same goes with China and Russia and every other country that wants to move up the ranks of global power. This is why US pushed for local oil exploration and production in the past few decades. This is why US is concerned about China's control on rare earth minerals. This is why US is restricting advanced computer chips sales to China. And this makes investing in resources an interesting proposition during tough times. With resources, there is of course the human resources aspect, but in this video, we will focus on the natural resources that basically cover traditional and alternative energy, food resources that are agriculture and poultry, base and precious metals, and rare minerals. 91 was previously known as Investec Asset Management, a business arm of Investec, which is an Anglo-South African international banking and wealth management group. In 2020, Investec decided to de-merge the asset management business and retain just 25% ownership. As part of the de-merger, the asset management business rebranded into 91, and dual listed the new company on London Stock Exchange and Johannesburg Stock Exchange. The name 91 was selected in recognition of the founding of the asset management business in the year 1991. 91 today is a global active fund provider with over 240 investment professionals managing over 160 billion US dollars of AUM. Employee ownership is pretty high at 30%, meaning many fund managers have their own skin in the game to ensure the company and the products do well. 91 has 21 offices across 15 countries, serving mainly institutional investors, but has been trying to increase retail and private investor coverage over the years. While the main business naturally comes from South Africa and UK, 91 has a decent spread of clients coming from US, rest of Europe, and Asia Pacific as well. 91 adopts more of an independent team-based approach. These teams manage a spread of funds from equity to fixed income to multi-asset to alternative solutions. The 91 GSF Global Natural Resources Fund is co-managed by 3 members from the Natural Resources team. Paul Gooden is a recent hire and joined 91 to take on the head of the Natural Resources team in August 2024. He replaced Tom Nelson, who previously was the head of the team and co-managed the fund for over 9 years. Paul brings with him experience in US and global energy sector. George Chevalier is the longest-serving member, having co-managed the fund since inception in 2008. He specializes in metals and mining areas. David Hale specializes in agriculture and soft commodities. He had been in 91 since 2008, though he only started co-managing the fund from 2020. While there have been some movements in the fund managers over the years, the presence of George in the fund since its inception provides stability and consistency in the style and approach of the management of the fund. The three co-managers also bring about different areas of specialty each, which looks like a good mix for the team. The 91 GSF Global Natural Resources Fund is a sub-fund under the 91 Global Strategy Fund, or GSF in short, fund family. 91 GSF is set up as a Luxembourg SICAV company structure and is UCITS qualified. Singapore-wise, the fund is registered as a MAS recognized scheme, which means it is suitable for retail investors. The Singapore prospectus covers a smaller list of funds compared to the main Luxembourg prospectus, as not all funds in the family are registered in Singapore. The fund webpage and fact sheet provides only the first paragraph of the investment objective and strategy, so we will refer to the full details stated in the prospectus. The fund's main aim is to achieve long-term capital growth. This is done by investing in global equities in the commodities and natural resources business that includes mining, extracting, producing, processing, or transporting of such resources. The basis of the investment is on the assumption that in the long term, there will be increase in prices of these resources. The other two paragraphs are general disclosures found in most mutual funds. The next section covers the investment philosophy that covers three core beliefs. The first essentially highlights the fund will focus on companies with strong return on capital. The second is that the fund will combine top-down assessment on medium-term commodity price forecasts with bottom-up stock analysis with an emphasis on returns. The third is that the team has adequate knowledge and resources to assess the commodity market fundamentals and individual companies to identify opportunities to deliver outperformance. Then, there is a section that gives a summary of the investment process, which is good as many funds do not really cover this in their documents. The first stage is the screening process to filter down the investable universe into a smaller shortlist of potential companies to invest in. In this case, it is stated the team has a proprietary screening process called Commodity Indicator, and the screening covers commodities as well, presumably to determine which commodities to prioritize over others during different market cycle phases. The second stage is fundamental analysis on the commodities and shortlisted companies. The third is the portfolio construction in line with risk constraints. It is specifically mentioned that the portfolio is constructed bottom-up. It would be nice if there is further elaboration on these investment processes, but these details are rare for retail investors. The last paragraph talks briefly about incorporating ESG within the investment process. 91 is known to place a high emphasis on ESG across its product offerings. While I normally do not say much about ESG in the fund strategies, ESG is indeed an important aspect for commodity and resources funds, in particular with environmental considerations for mining companies and agricultural producers. There is also a section covering the fund's benchmark, which is the MSCI All Country World Select Natural Resources Cap Net Return Index. It is, however, stated the benchmark serves only for performance comparison, and the fund is not restricted in any sense by the benchmark. The investment strategy translates to a decently diversified portfolio. Geographic breakdown-wise, US, UK, and Canada comprise about 70%, as these are where the most market leaders in the commodities and resources space are listed. Sector breakdown-wise, exposures are quite well spread across energy, base metals, and agriculture. Precious metals is a focus in the current market environment and is also in this fund right now. Although, investors who want to place bets on gold specifically should look for gold-specific investments instead of a broad resources fund like this one. The portfolio has less than 60 holdings, and the top 10 positions comprise 44% of the portfolio, which is still decently diversified from position sizing perspective. You can also find a nice mix of names from energy, such as Shell, Chevron, Total, and ExxonMobil, to metals and mining, such as Anglo American and Rio Tinto, to agriculture, such as CNH Industrial and Corteva in the list. The fund is base currency in US dollars and currently has an AUM of over 700 million US dollars. The fund was incepted in 2008, so the team definitely has ample experience navigating the fund through the market cycles over the years. The 91 GSF Global Natural Resources Fund comes with 4 retail A share classes registered in Singapore. There is the accumulation share classes for US dollars, Hong Kong dollars, and Sing dollars hedged. There is also one distributing US dollar share class that is quite useless because it is an annual distributing frequency and has a low payout yield of less than 1%. Therefore, I don't see any reason for any investor to go for this share class at all. The fund does offer other currency share classes such as Euro and Sterling, though these are not registered in Singapore. The retail AA share class has a 1.5% management fee. Adding other expenses comes to around 1.93% to 2.03% total expense ratio, or TER. Up to 65% of the management fee can be paid by 91 to distributors as trailer fees. The fund allows for up to 5% subscription fees, though I think anything more than 2% for mutual funds is excessive. The 91 GSF Global Natural Resources Fund has a long track record since 2008, and its webpage provides a nice performance chart to illustrate its returns. For the full lifespan of the fund, it has had a decent outperformance versus the benchmark, although it can be clearly seen that there were different periods of outperformance and underperformance. On calendar year basis based on past 10 years data, we can see that the fund underperformed the benchmark continuously from 2015 to 2018, and then started outperforming the benchmark continuously from 2019 to year to date. I am not sure what has changed in 2019, but to be able to maintain a yearly outperformance for the past 6 years reflects the team is doing something right. It is also useful to note that this is one of the few equity exposures with positive returns year to date. Looking at annualized returns in the long run, we can expect this sector and the fund to deliver around 6 to 7% per annum returns. However, the market cycle magnitudes can be quite aggressive, as seen in the 22% per annum returns for the past 5 years. But how does the natural resources sector compare with global equities? This 10-year chart comparing the fund versus iShares MSCI World ETF shows clearly that in the long run, natural resources sector tends to be more defensive and has lower long-term return expectations. However, natural resources sector appears to have done well when global equities corrected in 2022 and as well as year to date, as previously observed when we looked at calendar year returns. So, the fund can potentially be used as a way to reduce volatility and drawdowns in a global equity portfolio. Next, we compare the fund against some of the other popular peers in the category. On the same 10-year chart, we can see Franklin Natural Resources is a clear laggard in performance, so that can be removed from our consideration. BlackRock Natural Resources and JP Morgan Global Natural Resources have had a pretty similar track record, and they were both doing slightly better than 91 from 2015 to 2019. However, 91 caught up and had a strong outperformance in 2023 and 2024 versus BlackRock and JP Morgan. So 91 does seem to have a pretty good performance, especially in recent years. For Sing Dollar investors, the fund does have a Sing Dollar hedge share class as previously mentioned. The Sing Dollar class delivered 6.17% per annum for past 10 years compared to 7.33% per annum for the US dollar share class. So that translates to an average of around 1.2% hedging cost per year. I have also included the United Global Resources Fund from UOB AM here, as this fund is actually sub-advised by 91. So you can see the track record is near identical to the 91 funds. While the United Global Resources Fund appear to have a better return in Sing dollar terms, I would suggest not to go for this fund, as the fund size is lesser than 10 million Sing dollars, which looks way too small and runs a risk of termination. So it is still better to stick to the original 91 funds. With that, let's summarize our findings. 91 is an Anglo-South African-based global asset management firm that offers distinct theme-based investment funds. The 91 GSF Global Natural Resources Fund is launched in 2008 and comes with a decent long-term track record. Performances look superior compared to both benchmark and peers, especially in recent years. There have been some key personnel changes over the years, although one of the co-managers have stayed with the fund since inception. The fund runs mainly a bottom-up fundamental analysis approach that looks to be working based on its track records. Providing some additional details on the investment process would be a nice to have. Natural resources investing tends to have a lower long-term return compared to global equities. However, this sector can exhibit negative correlation with global equities during significant market stress such as 2022 and year-to-date when the sector outperforms well while global equities corrected. In conclusion, the 91 GSF Global Natural Resources Fund looks to be a decent pick for investors interested in this sector, and the current market conditions provide a good timing to consider such a fund. This concludes my absolutely biased comments on the 91 GSF Global Natural Resources Fund. If you find this video useful and would like to see more related contents, please subscribe to the channel. Thank you and have a great day.